Hello, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters. Is it?
Hello and welcome to this special bonus episode of Motor Trade Radio. Today we're delighted to welcome back to the pod Robert Forrester, CEO of Vertu Motors. Robert's joining us to discuss the group's latest financial full-year results, which were released this morning, Wednesday, and to provide an update on current trading. So welcome back to the podcast, Robert. I know it's always a busy day for you when the full years are published, so many thanks for joining us.
Absolute pleasure. And can I just thank you because I listened to last week's podcast and changed my presentation for 2 facts.
Oh, what were they?
I didn't have in the number in my head of the total number of vehicles on the road.
Oh, right. Yep.
So that was interesting. And when I'm talking to shareholders about the FCA redress scheme, I will be mentioning the celebrated consumer who signed up for 21 management companies.
Yes.
So it was useful. Very good podcast. And
Oh, well, many thanks for tuning in.
Getting my messages.
Yeah, I think that's absolute madness, Robert. I think the 21 claims is lots of crazy, isn't it? You just can't make.
Well, God loves a trier, don't they?
They've spent a lot of time filling in those claim forms, haven't they?
He's going to get a lot of admin fees.
Yes.
Yeah.
And not very much money.
So I'm glad there was some stats in last week that was really useful. We try and do our best, Robert, as you well know. I mean, you've been a busy man today, so let's get on, because I know you've it's a big day for you and the business. So talk us through the headline figures for the year and sort of summarize the group's performance, because there's a lot to dig into here, isn't there?
There is. So we had adjusted profit before tax of 24.5 million, which is slightly ahead of market expectations. I think there are 3 things that pop out. One, lo and behold, the zero emission vehicle mandate is reducing substantially the industry's new car profit, both for manufacturers and for retailers. So we saw a substantial move back yet again in new car profitability. The second year, I think in the last 24 months, we've seen new car department profitability back about 20 million quid, which is a massive number. So that isn't very helpful. The second thing is we've seen a significant rise in after-sales profitability, which is very helpful in helping to offset the new vehicle issues. Some of that was because we actually increased our internal rates for the used car department, but some of it was more labour sales, higher technician efficiency, more selling of VHC product, and the success of our VPay. So we saw strong part and service. We actually also saw strong accident repair, smart repair profits as well, which grew about 2 million. So that was sort of fine, apart from the fact profits were down. We then had the JLR impact, the cyber attack in September, which I think last time we spoke, we said we thought that cost up to 5.5 million. It actually cost 3.9, but we have now finalised an insurance claim, which gives us 3.4 million. So actually, in the numbers to February, the disruption caused by the JLR cyber effect was quite muted. The main issue is the zero emission mandate.
And Robert, looking at the main revenue streams, within your results, you do point out that new car sales remained weak and used car margins remained stable, which very much provided an important source of income. Is there anything else you can add to new and used car sales?
Well, in terms of new, Motability was very much down, double-digit down. And I think that was because of the timing of the renewals, and COVID really upset the timing of Motability renewals. So 2025, significant double-digit down in Motability. However, when you get into March 2026, it starts rising quite considerably. So that's timing as much as anything. The new vehicle market itself actually did see a bit of growth, but the profitability due to the impact on the manufacturer of the Z mandate is there for all to see, actually. And you talk about it almost every week.
Yeah.
When we look at fleet, we've done exceptionally well in growing fleet market share, which helped, particularly broker business, salary sacrifice, public sector. I think the key three there. When you get into vans, the van market was a mess. The van market was down 8.6% in the financial year. We are 5% of the UK market, so market declines like that are quite painful to us, and that didn't help. Why is the van market down? I don't think it's an A-level question, is it? I mean, business confidence is clearly down.
Yeah.
But the zero emission mandate for vans is a total joke. If you think cars are bad, I mean, the target for 2026 is 24%, I think, in vans. The fines are £15,000 a van, and the market seems stuck at about 9% mix. This isn't going well.
Yes.
I think that it's worse in vans, actually, than it is in car. So that was problematic. Used cars, actually, nicely stable, to be honest, in terms of volumes and in terms of margins. I mean, I do have, if you return to current trading a minute and just talk about used cars, I think there's some interesting things going on. The concerns over the Middle East, fuel prices, etc. Last time that playbook went through, we saw problems with residual values in larger diesel cars. For obvious reasons. If the diesel price shoots up, you tend to get problems in larger diesel car residuals.
Yeah.
You probably see some stronger residuals in battery electric vehicles, but let's be honest, the zero emission mandate crucifies battery electric vehicles due to oversupply. So it might get slightly better, but it won't be astonishingly good. I just wonder, I wouldn't mind your view, Philip, on this, whether the growth of the new car market in 2026 is actually largely Chinese brands, for sure. But it's not that necessarily they're taking volume off so much the incumbents. I just wonder whether people in a 3-year-old Mercedes are just looking at some of this lovely Chinese product on good PCPs and saying, I'll have one of them new ones. I think there's switch from used into new, and that's what's driving some of the Chinese volume.
I think you're right. That's the big question in terms of that new car market, whether, do we see a shorter new car ownership cycle because of, the change in life cycle of the Chinese manufacturers, or two, that actually age profile ownership shrinks so that those 0 to 3-year-old owners become new car owners. That would normally, as you say, maybe for buying a...
Well, it's quite difficult to understand a double-digit increase in new car volumes. Okay, the March-April thing was a bit funny last year, but still, the point's there when the consumer's under a lot of pressure. And I think it must be a switch from used into new. The SMMT numbers on the used car market was, minor declines. So I just think there's something in there that some of these Chinese brands are taking used car customers.
I think there will be. I think that if you're normally a 3-year-old premium used car buyer, that suddenly you can get a brand new high spec,
yes,
low risk vehicle with that serves the purpose. And some of the brands that you're now involved with, that's the Jaecoos and Omodas and Cherys, particularly. Your Jaecoo. I mean, the Jaecoo 7, the number one in March, 10,700 registrations. Jaecoo taking 22,000 a day. That has got to be, how many of those would normally be in a 2-3-year-old Qashqai, and suddenly, or a Mercedes, some GLE or something, that suddenly, that becomes, I can get in a brand new car for.
No, I think there's definitely something in all that, for sure. And I think it's one to watch, but certainly my mind's gone to that because I can't fully understand the massive increase in the new retail numbers. We'll see how it goes over the next few months. But
Yeah, particularly about with the challenging backdrop in the economy and cost of living, and as you say, pump prices.
Yeah, and we are trying to sort of deal with that insofar as you know, we launched, value cars by Vertu from the 1st of April, where we're trying to attack the 7 to 14-year-old used car market, which is a bit of a novelty for us. It was about 11% of our sales previous. We want to grow that, and we've done a lot of work around preparation standards and parts pricing and warranty products and financing availability to grow that element. Because in a cost of living crisis, let's be honest, the people who've had a pay rise are people on minimum wage. They're probably used car customers to a large degree, so I think we need to be attacking that market, which we are doing.
Yeah, no, definitely. I mean, we talk about the Chinese or the new entrants, and last time you were on the podcast, you talked about you were heading off to China for your first time on, let's call it, a fact-finding mission.
Yeah. I found plenty of facts.
That was the next thing. And you've been fairly vocal in, one, your support of the new entrant brands with the group. I mean, you've got, as we said before, Jaecoo, Omoda, Chery, and Leapmotor.
Well, we have, in fairness, actually, we haven't got those brands yet, but we have arrangements with Chery to push them into the group over the next 6 months. So we've got 3 Geely, we've got 5 BYD, we've obviously got big MG business.
Yes.
But we are now moving into those Chery brands, and also Leapmotors with Stellantis. So do you want my key learnings from China?
Yes, please.
It was an education. Number one, Chinese car factories are running at about 55% capacity.
Yeah.
That's not good. That's not good for profitability. And I think a lot of Chinese manufacturers, I think BYD is still profitable, but a lot of Chinese manufacturers are actually struggling. And you're going to struggle with the 55% factory capacity, aren't you? Let's be honest. That's not going to be good. The car market in China is down 22% year to date. That's not good. If you've got overcapacity in your factories, it just gets worse. And they have battery electric vehicle subsidies up to the end of December, and the government removed them, and battery electric vehicle demand has gone down. So there's a lot of pressure in China. And then I think exports become de facto the release valve. I think I'm right in saying BYD in latest quarterly numbers, 46% of their volume was actually export out of China, which is an amazing number, actually. And there is clearly a desperate level of competition in terms of margin erosion, both for motor retailers in China and also manufacturers. So when you come to the UK and you've got no major tariffs on Chinese imports, I think the UK becomes the number one market for Chinese brands. And I think that's what we're seeing. I also was exceedingly impressed, and I'm going to upset some people here. I was unbelievably impressed by the number of engineering graduates they produce. It is unbelievable, the number of graduates who come out of it with engineering degrees. And I think that explains the fast pace of technological change in China, the way that they are producing very high tech, AI usage, autonomous driving, battery technologies is phenomenal. And I did sit back and think, wow, and what are our graduates coming out of universities with? Psychology, business management, and sports science.
Yeah.
And I know that's a parody of the situation, but it is not far off the truth.
Yeah.
And that is a problem.
Yeah. Yeah.
So I think they have got some major positives and some major problems. But overall, you can't argue that the cars are good cars.
Yeah, exactly. And I mean, you're fully aware because I've talked about it on the podcast, but to add to your, you talk about that 55% capacity, and you look back at the 2025 numbers, and if you look at just cars in terms of global production for cars, it's 71.3 million, and China taking a 42.6% share of that 71.3 million. And as you say, a majority of that is export.
I think the other thing that's impacting, and nobody really talks about it, is there is massive inherent inflation coming with regards to car production globally. the oil prices affect inflation, commodity costs are impacting inflation. So I think we are going to have some increasing pricing. I also think actually in the UK, we are seeing with our highly professional government, bond rates are higher, interest rates likely to go up. That is going to, we were all expecting interest rates to go down, weren't we? So that could affect payments, and underlying car price inflation could increase, which could be interesting.
And finally, Robert, it's now 2 months since you closed the books on your financial year. How did March and April perform for the group? And what's your outlook for the rest of the year?
Yeah, I mean, I was surprised just how good March and April were. We produced profit in excess of last year. The new car market was up, which was a novelty, actually. We performed very well. Our battery electric vehicle sales continue to outperform the market. Motability is important to us. It got back to growth. We were 30% up or something in fleet car volumes year on year. And our van, although the market was down for vans, I think we grew vans by about 8% like for like. So we had a very strong sales performance. There was a little bit of margin erosion in fleet, but we made more money in new. The real star of the show was Aftersales. We generated £3 million more profit in Aftersales in March and April than the year before, which is staggering, actually. We've also done a lot of work over the last 12 months in terms of our cost base. We did remove quite a lot of costs from the business in a variety of areas to help FY27's numbers. I think that's helping. We've got reduced debt, so that helps in terms of interest bills. So there's a lot of self-help gone on, which I think is helping a lot. So I was very pleased. We are actually in the middle of a new car event at the moment. So we've done something that's probably a bit odd, which is we've launched a 10-day new car event starting last Thursday, backed up by £500,000 of TV spend. And every senior exec was out the weekend. I did all the Birmingham dealerships actually on Saturday. And on Saturday, we grew our new car volumes year on year 50%. Wow. So give the customers an offer, spend the money in media, and you will make sales.
Yeah.
Yeah.
So I think the consumer's a bit more lively. Now, that might all change with Middle Eastern issues and oil shocks and government changes. You could easily upset the consumer. But the consumer is not as dead as I thought they would be at this point. And we're just taking the view that we have to have things in our own control. It's good that people are busy. People like being busy. They like selling cars. They like earning money. It helps the after-sales business getting throughput. And I think we're in a good place.
Yeah. And Robert, just picking up on that 10-day event, because I think that's going to be of interest to a lot of listeners. What is the main theme behind that? And how does it differ from what you've done in the past?
Well, we've never had one brand until April last year. So we had our first ever combined used car event in November, which went very well, actually. And then in February, we got all the new car events that we normally have, put them in a 10-day period, backed up with $750,000 of TV spend and went for it. It was a good success. Now, you can imagine having a new car event in February, can't you, ahead of a plate change? Well, when we came up with the annual strategy, we put an event in May, which is not a natural time for new cars, let's be honest. Yeah. But I took a bit of a counter-cyclical view. Going in May, no one else is in May on the telly for new cars. Well, that sounds a good idea then, doesn't it? Because if somebody's in the market for new cars, they're going to come to us. Yeah. Having the whole group animated, focused, energized at the same time is normally a good thing. And then back it up with TV spend and you've got some momentum. So we've got strong offers from the manufacturers. We've augmented those. We've got a message on TV and it seems to have gone very well. Indeed, I am delighted. And that is going to help you too.
50% growth cannot be sniffed at, can it?
No,
it's not good off nose on that one. I mean, that's a
lot of pressure on the people at the bottom of the league who didn't see a 50%. That was an exciting afternoon. I actually got on the train at 3:00 in Birmingham and logged on. I had 3.5 hours on the train home. And I did a league table of sales on the day and wrote to these dealerships that hadn't seen a car sale or a very few new car sales and said, when you sell a car this afternoon, email me.
Yeah.
Just to create a bit of urgency. But as a group as a whole, I mean, we're talking one or two outliers, really. As a group as a whole, it was a storming success, to be honest.
Yeah.
Did you get some emails?
Oh, I got some back. Yeah. It's amazing how they can close deals when they've got to write to me, isn't it?
It tends to put a little bit of an incentive on, doesn't it, when you see yours? I mean, yeah. It's sat on a train on us.
Well, there's a lot of pressure on you, though, isn't it? If the group, I mean, Redditch Ford sold 19 cars on Saturday. I think it's a fair share.
Yes.
And then you've got others not doing very much, as you're going to get in a group. But then you ask the question, why are you not doing it?
Yeah.
But overall, delighted. And I think the consumer is not dead.
I think, yeah.
Where we go from here, different question, but we'll just have to play the cards we've got at the time.
Well, you've demonstrated to your business, haven't you, your teams, that actually, you put the effort in, do something a little bit different, and you can get that result. And
you reap what you sow. I mean, the good book wasn't wrong, was it?
No. I mean, conscious of your time, we've got through a lot there. So, I mean, yeah, congratulations on, a result in a very complex market, to say the least. I mean, coming on board with those new Chinese brands and obviously following your trip to China and your work with that from last time. Can you name the 75 manufacturers now, or 76, or is it 78? I'm not sure.
It's our pub call, Rob. I cannot. I cannot.
Yeah, neither can I. Neither.
Well, I'm surprised you can't, Philip. If anyone could, it would be you.
I might be able to name it. I probably can't pronounce them correctly.
Well, look, Robert, many thanks for coming on. We always enjoy our conversations with you, and and thanks for coming on the pod on what is a busy day for you. But unfortunately, that's all for now. So many thanks for listening to this bonus episode of the Motor Trade Radio podcast. We're back with the headlines on Saturday morning. Until then, it's goodbye from me,
and it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors and Cazoo. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday.